a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about software stocks and ETFs. Could they be the next big AI opportunity? So we know that artificial intelligence or AI is the biggest investment theme this year because it is rapidly transforming so many industries, and investors have been trying to identify the winners of AI gold rush. Now, chip stocks, semiconductors that are picks and shovels, they are the most obvious winners. And that is why they have surged this year. NVIDIA, the poster child, the designer of most sophisticated AI GPUs, is up more than 230% year to date. Now, according to a CNBC report, investors are now looking at software stocks for reacceleration over chip stocks, which are already up a lot. And according to this report, during the mobile internet hype cycle, investors first piled into chip stocks, then into infrastructure, and then finally into software and services stocks. And if that cycle is any guide, then for the current generative AI hype cycle also, investors could now consider uh, software and services stocks and infrastructure stocks. So, in fact, we have seen that during the month of August, software stocks and the popular software ETF, it outperformed the most popular chip ETF. And according to Kathy Wood, who is ARC CEO, the next big AI opportunity for investors could be in software stocks. And according to ARC research, for every dollar of hardware sold around AI, the software pull-through could be somewhere between $8 and $21, though I should point out that Kathy Wood missed on NVIDIA's powerful rally this year. They had sold NVIDIA too early, citing high valuations. Now, Microsoft, the biggest software stock, has already been a big beneficiary of AI hype cycle, given its big investment in ChatGPT creator, OpenAI. But there are many other software stocks that are developing software for AI-enabled applications that could emerge as the next big winners, and they are still trading at attractive valuations. So let's take a look at 3 ETFs that investors could consider. So the first ETF that I'm highlighting is by iShares. It is the most popular product in the space. The ticker symbol is IGV. And as the name suggests, it focuses on North American software companies, follows a market cap weighting scheme, has 6.6 billion in assets, and charges 41 basis points. To take a look at this ETF, we can go to the quote page on Zacks.com. You can read our research report, articles, and using the link, you can go to iShares webpage for this ETF and read what it does, and also look at the current holdings, the portfolio. So, being market cap weighted, it has outsized exposure to some of the top holdings: Adobe, Oracle, Salesforce, Microsoft. These are the top holdings, significant weights in the portfolio. The second ETF that I'm highlighting follows an equal weighting scheme. It is by State Street Spider product, holds software and services stocks, and is slightly cheaper, 35 basis points in expense ratio, and is smaller to 315 million in assets. Again, you can go to the quote page on Zacks.com And using the link, you can go to the Spider webpage for this particular ETF and see what it does, learn more about its strategy, and also look at its holdings. So since it follows a modified equal weighting scheme, so you will see many names that are not so familiar, not as familiar as Microsoft and Adobe's of the world. Uh, so, so if you're worried about top heaviness of the other ETF, you can look at this ETF. The third ETF that I'm highlighting is by Invesco, and this actually rebranded just last month, or in fact on August 25th. So this used to be Invesco Dynamic Software ETF with the ticker symbol PSJ, and now it has rebranded as AI and Next Gen Software ETF with the ticker symbol of IGPT. Makes a lot of sense. It follows a fundamental weighting scheme. It is the most expensive of the three and also smallest of the three, 178 million in assets, and has an expense ratio of 60 basis points for its more sophisticated weighting scheme. Again, let's go to the quote page on Zacks.com and Invesco web page for the ETF. So you can learn about the methodology, and you will see that you get stocks like Adobe and then NVIDIA too. NVIDIA made up from Alphabet and AMD. These are the top holdings in the ETF. And this focuses on companies which are developing the next generation software for this particular ETF for AI. And that is defined as the strategy of this particular ETF. But you can learn more about the underlying index, etc., by reading the prospectus for this particular ETF and see how it changed the strategy. Now, on the next slide, I have the comparative performance of these ETFs, and I have not included the Invesco product because it just changed its strategy just about 7-8 days back. But I have included the CHIP ETF because we talk about how investors piled into CHIP stocks first and the CHIP stock surge. So the CHIP ETF for SOXX is up about 42%, more than 42% over the past year, and I own the ETF and the ETF investor portfolio in full disclosure. Then IGV is up about 30% over the past year, and the Spider product has just slightly outperformed the S&P 500 index. It's up about 17%, whereas the S&P 500 index is up a little more than 15% over the past year. Thanks for watching. Make sure to check out Zacks.com/promo for an interesting offer. Also, make sure to subscribe to our YouTube video channel so that you do not miss anything. And I'll see you next week.